Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. And today it was a surprising day, we can say. Nifty just traded within a range of 105 points. Every day Nifty used to make more than 200 point move up or down from intraday low to intraday high to intraday low. But today it was relatively range bound, we can say. From intraday high to intraday low is just only 105 points. But within this there was a huge volatility. That's a different story. In the morning market went up, then came down, then again went higher to take the day's high. Then again in the last 1.5 hours, as usual, FIAs will start selling after 2 p.m. and Nifty came and broke the day's low. So this is such a small range ahead of such a big event like Fed meeting. It was really surprising, but the intraday volatility, was still high, and from 2 p.m., that's when these FIAs come and sell. So they started selling. Nifty fell more than 100 points after 2 p.m. And in fact, I expected this and I wanted to hedge my long positions. So what I did, I bought 15,600 put option and I financed it by selling 15,900 call option. Both were trading around the same price. And later when the market came down, my put option which I bought for 45 rupees gone to 70 rupees. The call option which I sold for 45 rupees, it has come down to 35 rupees. You may remember earlier also I told you I bought 15.7 put option and financed it by selling 16,000 call option. And Bank Nifty was more volatile, but it has actually outperformed. And today on a close to close basis, Nifty was down 40 points, but the entire 40 point fall came only from Reliance and Infosys. Even the Nifty 50 stock 25 up and 25 down, it's an even Steven. And broader markets outperformed and it's a Nifty has underperformed. Within the Nifty, auto stocks have done very well. Yesterday, because of Bajaj auto news, all the auto stocks came down. Today, most of the stocks have recovered. Even some of the stocks were trading higher than yesterday's high. For example, Hero MotoCorp as trading higher than yesterday's high. And many people have bought put options, and if we can say about this today's price action, we can say this is a calm before storm. And so definitely tomorrow it's going to be a storm. In the last half an hour, there was a huge spike in option premiums. And for tomorrow expiry, 15,200 put option, it was trading around 4 to 4 rupees, 4.5 rupees until 3 p.m. And from 3 p.m. to 3:30, it shot up from 4.50 to 12.50. And 3 times in just in a matter of half an hour. Such was the spike. Even the volatility index was down throughout the day, and after 3 p.m. it has shot up. So what does this indicate? And people left, right and center, the buying put option so that tomorrow gap down they can make money. But for one or the other reason, if the market gap up, these people will lose heavily. And that is the case with me also. And tomorrow, huge gap up, I will be in trouble. But normal opening, 50, 100 point plus or minus. 50, 100 point minus, I will be making more profit, but 50, 100 point plus also, I will have nothing to lose. At the end of the day, FIAs have sold once again for 3,500 crore. No matter what happens, these FIAs are not going to stop selling Indian markets. I think I have spoken earlier already. The Indian stock market compared to other emerging markets, the valuation is 60 to 80% higher than the similar emerging markets. And now, wherever the high PE ratio, those stocks are being sold into. So naturally, Indian markets will also be sold into. So that is the only scary thing. If our market valuation has to come at par with other emerging markets, and Nifty will have to fall another 4,000, 5,000 points. So that's very scary even to think. So though FIAs have sold for 3,500 crores, the domestic institutions have bought for 2,800 crores. And that's also as usual. But I really don't know from where these domestic institutions keep getting so much money. ECB, European Central Bank, called for an emergency meet. And I think market is reacting positively for that, because they are expecting ECB to do something to calm the bond market. I think the bond prices have shot up so much. So because of that, European markets are trading higher. Even US futures are also higher. And it's very surprising, US futures are higher ahead of the Fed meeting. And that's because many people think for the last 5 consecutive trading sessions, Dow was down, and 7 consecutive trading sessions, I don't think that Dow has fallen in the last many years. So people are thinking definitely today it will be positive, and this is what we call it as gambler's fallacy. So it has already fallen so much, how much it's going to fall, the market will fall. So anyway, the US market, there is no point in looking at US future now. We have to see the US market only after midnight. At 11:30 p.m., the Fed announcement will come, but the Fed chairman will start speaking at 12 midnight. So that is when the people will get the clue what Fed is planning to do in the next few meetings, or what is the Fed's view about the inflation and the economy and so on. So we will get some clear picture only after 12 midnight in the US markets, and that will decide where we will be opening tomorrow. So until then, there is no point in looking at SGX Nifty or US futures. And looking at the open interest, there was a huge addition of open interest in 15,700 call, 15,800 call, and all the call options. There was hardly any put writing. People would have written puts, but more people would have bought it. So on a net level, so that is very, very little. So markets are still looking bearish, and it will continue to look bearish unless some short covering happens in US. So we will see, and I will be happy as long as there is no huge gap up tomorrow. So we will see tonight, tomorrow morning we will come to know what is going to happen. So hope you enjoyed watching this video. Thank you for watching.